Hi, I'm Mary Lyons, the Wealth Woman.
And I'm Eric Alexander with Benchmark Income Group.
Welcome to the Big Wealth Podcast. Today, we are sitting here waiting to hear if anyone has won the lottery as we're recording this. And so, hopefully, by the time that comes out, we'll actually know if someone has won the biggest jackpot in the
Right?
history of the lottery in the United States and
Yeah.
possibly the world.
Yeah. It's massive. It's like it's sort of life-changing. All lottery money is sort of life-changing money, but this is on the
A whole
ridiculous
different
scale.
scale.
Yeah.
Right. Well, it definitely has sparked a lot of conversations in our office and certainly in my household about how things would be different if we won the lottery. And then
Right.
also some of the logistics of, okay, if you come into sudden wealth of any kind, whether it's
Right.
lottery winnings or inheritance or the sale of a business that you've been growing for a long time,
Right.
what do you do? Right?
Yeah.
What should you do? So, Eric, what would you say is the first step here?
Well, I think one of the first steps for me is stop. I think for me the impulse is I have a problem and a good problem. Like this is a first, not even a first world problem. This is a hyper first world problem of I've got $2 billion or whatever the number ends up being 900 minus taxes. I think I did the math. It was about 550 once you pay taxes, somewhere in that
In
neighborhood. But
Texas, it might be less if you're in California.
yeah, that's right. Yeah, come to Texas. The weather's nice. So, you one of the big things that we talk about with sudden wealth, whether it's someone passing away and leaving you an inheritance or death benefit or winning the lottery, is don't make any big decisions. And that to me is sort of a universal constant. Whether the money is $1 million or $550 million, is don't fight that impulse in your brain to go start making
I'm
everything
buying a new
work.
car.
Yeah. Yeah, maybe you pay off some debts and some of those things, but let's don't go buy a Maserati tomorrow because we can. And
Well, I
that
think
to me,
that
that's the first
pause
one.
is really important that you're talking about, Eric, because what happens is there's this sudden influx of money. All of a sudden, there are things that are possible that weren't possible yesterday.
Right.
And so you start thinking about all those possibilities and the things that you want in the immediate future. And there's so much emotion surrounding all of that. It can become very difficult to see whether you are making emotional decisions or logical ones.
Right.
And if you are not used to working with dollar amounts that are quite that high, I think sometimes there is a feeling of like, especially with the lottery winnings of this size, there can be
Right.
the feeling of there's no way I could ever possibly spend through that during my lifetime. But the statistics show that for most people who come into a large sum of cash, and we're talking millions of dollars, that they are broke again and possibly even worse off within 3 years of winning the jackpot,
Yeah.
right? Or inheriting the money. Because the thing that happens is that if you haven't been dealing with that kind of money all along, you have to learn how.
Right. Yeah. Well, and there's
And
there's what
you're
Gay
learning
Hendricks
real
calls
time.
yeah, and there's what Gay Hendricks calls the upper limit problem in his book, The Big Leap, of maybe I don't, maybe you think you don't deserve the money. And you don't say that to yourself, but your subconscious starts working to say, we've never had this amount of money before. Oh my gosh, this is amazing. And then your body sets about this idea of your mindset versus how much money you have. And really quickly,
And they
if you're
don't
not
match all
careful,
of a sudden.
yeah, yeah. You've got on a level of 1 to 10, you have 10 amounts of money, and your mindset around money is at a two. Those two are not incompatible if you're not careful. And the two will win. You will figure out a way to destroy that to get back to where you feel like you're comfortable. Like, yeah, this is where we live. This
Right.
is what we do. So that
Right.
first thing about really pausing, I think, is a big one. But there's some cool logistics that you and I were talking about, and you'd gone way deeper into this rabbit hole than I was thinking of. But because there's a lot. $2 billion is you have big rings on your back, and you don't work at a retail joint. You may
Yes.
be a target if you're not smart about how you sort of deploy that or how you
Yeah.
how you sort of announce that.
Well, I think there's a couple of things. So, for winning the lottery, generally speaking, your ticket is essentially a bearer bond. Whoever has the ticket and shows up to turn it in is the person who actually ends up with all of the money. And so I think logistically, the first thing you have to do is make sure that you have multiple copies of that ticket and a way to prove that it is indeed yours. So time stamped, date stamped, pictures, digital, print, whatever it may be. And then obviously you want to store the ticket somewhere safe. So that could be like a fireproof safe that you have in your home, or it could be going and getting a safe deposit box at the bank and just making sure it's there, because you typically don't, if it is the lottery that is your sudden wealth, you don't want to claim it immediately. And most lotteries will give you somewhere between 6 and 12 months to claim it. And the reason that I say you don't want to claim it is because some states, when you claim it, automatically it's public information, but other states will actually allow you to claim it anonymously. So especially for a sum like we're waiting to hear about right now, or have already heard, depending on when you're listening to this, but for a sum that large, if you have the ability to claim it anonymously, that is a really good thing. And one of the ways that you can do that is by layering trusts and then having the representative of the trust actually go and make the claim in the name of the trust. And if you've layered the trusts accordingly, you'd have to do a lot of digging in order to find it. But obviously that's something that you want to go and consult an attorney who has very specific knowledge in this space about creating, so that you can retain anonymity. So don't go sharing to everybody that you know, coworkers, children,
Facebook, Instagram,
that you just won, because automatically that means that everybody's going to come out of the woodwork and come after you. So that anonymity, I think, is definitely a good thing. And even if you're inheriting money or something of that nature, broadcasting that you have millions of dollars is, you have to be prepared for what happens when you do that.
Yeah. I remember a phrase someone told me once is never miss a good opportunity to shut up. And I think this is one of those moments where it's like, you know what? I'm just going to keep this one to myself. I'm just playing this one close to the vest.
Yeah. So I think, like, if we're staying in the lottery vein, and I think we get into inheritances here in just a second, but
yeah, for sure.
If we're staying in the lottery vein, you have two choices for how you take your winnings. One is the annuity option, and the other is the lump sum. And so there's some pros and cons to doing this. But I definitely think if the annuity option appeals to you, one of the things that you want to do is decide whether that option is something that you want the lottery commission or the sponsor of the lottery to maintain for you and produce over the next 30 years, or whether you want to take it as a lump sum and then find other companies who will produce the annuities for you. And that will depend on payout rates, what's competitive, that sort of thing. But Eric, give me your thoughts on the annuity option.
Yeah, so it's so funny because we run into so many people with what I would call spendthrift problems. If there is $1 in their wallet, they will find a way to go blow it. And so some of those people, and I'm just thinking about as we've set up accounts and if we've worked with clients,
some of them are really high earners too. This is not just hey, I'm penniless and I blow whatever I have. It could be I make millions of dollars a year and I spend it too.
Yeah. Oh, for sure. And so we've had a number of people that have said, look, I need to go set these things up. I need to go set these accounts, insurance, investments, whatever it is. But I just came into a large sum of money, 100K, 200K, a million, whatever the number is. But if you leave it in my account, I will find a way to go destroy that wealth tomorrow. And so it's one of those things is like, please take this away from me. Right. And so we've pulled that money. We, physically pulled it away, but we're like, all right, cool. Well, let's set up this other thing that creates an income stream that you never have to worry about ever again. And that income stream will feed all the things that you want to have happen so that you don't have to worry about it. And we've saved you from yourself. So if you are a highly disciplined individual, man, lump sum all day long and go get on with your bad self. If you know that there is a twinge in your brain of, if left to my own devices, I will burn through it, then I think whether it's a state-run annuity or you find a private company to go help you manage that, I think that at least for a portion of it would be super intelligent. Because what you've said this 4,000 times, success in life is largely attributed to tricking yourself into making good choices. Right.
Right.
I think part of that is just knowing yourself of, can I handle that much cash in my checking account?
Yeah. So you and I have had a lot of back and forth about which one we would do if we won. And I would love to hear like what you would actually do right now. And
Oh
then
yeah.
I'll share some of what I would do too.
Yeah. So and it's a funny thing because my wife and I've thought about it quite a bit, just because it's such a fun conversation. It's sort of a life-changing thing that's like, well, what if there were no limits in life, what would you do? Right.
I'll tell you, like I spent $20 on tickets. That's what I spent on tickets,
Yeah,
not
me too.
because I thought I would win, but because it's worth the entertainment value
Oh yeah. It's like
and
Vegas.
the mental exercise of talking about how life would be different when there are no limits anymore.
Well, and that brings up a whole other podcast on that side of it of why,
Yeah.
because I think the other end of that conversation, I think it's actually a healthy conversation is, if there are no limits, what would you do? And then why are you operating in your life as if there are limits? And
Mm-hmm.
sort of a larger existential conversation. But like, okay, what if the universe is providing where you need to be? Why do you assume that the universe is a limited place? Go
Right.
do what you're supposed to be doing, especially if your first impulse, and this is not my impulse, but if your first impulse is, I'm walking into my job and giving a lot of people the finger, then why are you working there now anyway? Like you need
Right.
to start working your way through that, right? So for me,
Mm-hmm.
the first step would be, I would take the lump sum, because a bird in the hand, and I'm a little OCD and I want to be able to control it, and I don't want to
Oh,
rely on the
yeah.
state to go give me money later on, 29 years from now. But the first
Right.
thing we would do is probably create an income, what's called an immediate annuity, that would throw off enough money for us to live highly comfortable for the rest of our lives, even if we were really, really stupid with all the rest of the money. And for me, it was
So
all
you
about
did the
creating
research
space.
on that. You did the research on that. What would rates look like if you did that at your age today to make sure there was income for your lifetime and your lifetime?
The payout rate was I looked it up this morning. It was 4.922%. So for roughly a $500,000 income, it would require about $10 million in, you give them 10 million and they give you 500K for the rest of both of your lifetimes.
So some people would look at this and say, okay, but we're still in a historically low interest rate environment. Why would you do that?
Because I need space. I want
Right.
to buy time. For me, is what that is. I want to buy time and
Yeah.
know that if at the end of it I'm really a moron and I've done really, really dumb things, that I'll never ever be homeless.
Right.
And at 5 million, 550 million, I think is the math we did. It is a it
Mm-hmm.
is a proverbial drop in the bucket to make sure that all the rest of my life is fine.
Right.
So that, to me, that's step one, but there's about 10 steps on the other end of it. But what would you do? Because you and I have a tendency to look through these decisions very differently.
Yeah. Well, I think some of this just has to do with our innate personalities, right? Like I
For
feel
sure.
like a lot of times you look at things and you're looking at where does this break and protecting against it. And I'm looking at what can I do with this? Right. Sometimes like
Right.
I think that's why we make such a good combination is that I might some days be all gas pedal and you're like, whoa, don't forget you also need a break. And so I think these exercises are so much fun because I think it really takes both sides of this to make sure that you're doing something that's prudent as opposed to just saying like, oh, hey, let's do this thing. But I think honestly, for me, the first thing I would do is I would pay off any debt that I had. And we don't
Sure.
have a ton of debt. It's all related to real estate. And there's a little bit of student loan debt that we've been slow paying. And it's interesting to even say that out loud because I've done the math. And because of the rates that we have on the real estate, it actually doesn't make financial sense to pay it off. It makes
Yep.
more sense to just keep making the mortgage payments and, have the rest of the money invested. But I think if we're talking about a sum that's 550 million, I would do this a little bit differently because the efficiency doesn't matter quite as much. And we're not talking about a huge amount of money going to
Right.
pay mortgages off. There is something to me about just the emotional space of not having any debt, which feels good. And I'm willing to give up some return for the knowledge that I don't have to think about these things at all. Now, all that
Yeah,
stuff
for
is on
sure.
autopilot anyway. So does it really matter if I pay it off? No, it really doesn't at all. But there's just something like when you talk about giving yourself space, that's where I actually see that space.
Yeah.
And then I think honestly, so I would definitely do lump sum. I mean, given what we do for a living, I don't want someone else managing it. This
Yeah. Yeah.
is this is this is my area of
My
expertise. I'm
wheelhouse.
going to lean all the way into building that. But I think one of the things that I would actually do pretty quickly in terms of this is I would go and look at buying as much permanent life insurance as I could possibly get.
Yep.
And the reason for that would be I just have a general belief that I need to make things better for the generations that come after me.
Yep.
And there is absolutely no reason that I wouldn't put that together, create some type of endowment, right? Some of that might go to charity organizations or to the church, and then a lot of it to my kids and subsequent generations. But I definitely think that as I set that up, it would involve a lot of trusts, and that the stipulation inside of the trust would be going through customized education about how money actually works if you're going to be receiving income or
Right.
assets from the trust that I have set up. And so,
Well,
it's
right.
interesting because none of that is about income for me immediately. It's
Right.
more about impact for the generations that come after, both for my family and at a like community or even national level. Because from an income perspective, I mean, this is kind of to the point of like the dollar amount that you said you would annuitize. Like I live a really comfortable life right now. And yeah, there are things I might do. I'd probably get myself a sports car if I'm being honest. And I
Yeah.
might immediately go buy a house in Santa Fe as opposed to waiting till some of the other assets I'm building will fund it. But aside from that, I mean, I think I'm really a pretty simple
Yeah.
creature.
I don't need a
And
yacht. I don't
so
need, yeah. I can only drive one Aston Martin at a time. So, I mean, all of those things are pretty minuscule, right, at that point. But you mentioned two
yeah,
things that I thought were really brilliant. And I'm going to go in reverse order. But that
sure.
idea, you and I have talked over and over and over again about this idea of shirt sleeves to shirt sleeves in three generations. Is sort of this
Yes.
phenomenon of mom or dad, that first generation had nothing and they were eating beans and weenies and ramen forever and ever. And they built up this massive, sum of money, net worth, empire, what do you want to call it? And then that
Mhm.
second generation sort of has a loose connection to what mom and dad went through to get there. And so they
Right.
know what it's like. They saw the struggle, they saw how important it was. And so they maintained it. They didn't really grow it much of it, but they maintained it. And then the third generation comes along and they have no connection to grandma and grandpa. They have no real palpable connection to what it took to get there. And they have a
Mhm.
tendency historically to burn through that
Right.
and to make really really dumb choices and to become just sort of borderline hedonistic with the money. And then that fourth generation comes along and they're right back where their great grandparents were, 40, 50, 60, 80 years ago. And so
Right.
that idea of it's not just your kids even, but your kids and their kids and then their kids after that. How do you set up so that these people have not only the money but the education to know what to do with it so that they
Mhm.
can perpetuate that capital and that impact on the world beyond you 4, 5, 6 generations out. And I
Right.
think to me that is sort of one of the cool things of it. And one of the things that you mentioned that I don't think you knew to, or you weren't trying to mention, but I think there's so much meat there.
Yeah. Well, I just figure like if I can actually teach clients face to face how to build their wealth and pass it on, I should be able to do that in a recording and have future generations look at it. Right. And
Right.
at least understand some of the basic concepts and tools that exist today. And then hopefully give them the ability to springboard from that and start branching into the things that are available to them
Yeah.
in the future as well. Because there will be all kinds of innovation that we just don't know about and won't be able to predict that it will exist. So
Yeah.
I want to talk about a couple logistical things here too.
Yeah, sure.
So there are definitely a couple of people that you want on your team going
Oh
into
yeah.
this. I would say that probably one of the first calls I personally would make would be to my good friend Jeff Hamilton, who is an estate planning attorney with an LLM in tax, which is essentially a master's degree in taxation. And I would go have a conversation with him about tax strategy and what
Yep.
I need to do immediately on this influx of big money coming in to minimize my tax burden, not just now, but into the future. And part of the reason that I would call him specifically is because he's actually an estate planning attorney, but he has dealt with lottery winners before. And he worked for a firm where they actually did go claim the winnings for several people in the form of a trust. So he's got experience with that.
Right.
But he also has the resources on hand, and I know he has the capability because he already did our estate planning. So he would be able to kind of build into all of that. And he has such an interesting niche because he works with a lot of business owners, so he understands the business side of what's happening and then the estate planning side. And so it's the right thought process, at least for me,
Sure.
about how my kids will experience things, because one of them may want to be in this business and another may not, right? And so I would definitely talk to an estate attorney, to a tax attorney specifically, and then I would look for a CPA to do the actual tax work on all of this, in addition to hiring a true financial advisor who is looking at, okay, what does this mean today? What are our options for income? How do we grow the assets moving forward? And I think really assembling that team is key. And the basic, like if it is the lottery and you're claiming it, having the basics of that set up prior to making your claim is important. But partly what you really want is just to create the space to build your team and your plan. And I think slow playing that 6 months, a year, not rushing into anything, trusting your gut if you have a bad feeling about something, interviewing multiple people, interviewing other attorneys in the same space and asking how they feel about the people that you're looking at hiring, advisors too. Typically their peers are going to have some things to say, positive or negative, and it's worth looking at some of that.
Well, it's worth at least having that conversation, right? Because even if they're saying some nice things, if you're paying attention, you can tell what they really think.
Right.
And the other thing you had mentioned beyond logistics that I thought was really important is don't discount the emotional component. I remember I had a conversation with your dad, who's a mentor of both of ours for many, many, many years. And he's like, hey, Eric, and this is, I think, 2 years before he retired. He's like, I just paid off my house. And I'm like, you did what? I was like, Joe, how many meetings have I sat through where you talked about paying off your house is the dumbest financial decision you could make, and all of the inflation numbers and all the, future value and all the whole stuff, right? He's like, yeah, but I just wanted to be done. Like, I just didn't want the emotional drag on it. And I think so many people are, as the advisor side of it, and I'm thinking through CPAs, right? Their mission is to look at tax. They have one job, it's taxes, right? And as we think through the world through the lens of a financial advisor, our mission is preservation, growth, maximizing efficiency, all those kind of things. But the human part of it, the emotional component of it, is just as powerful as the other end of it. And it's the marriage of those two and the intersection of those, like, here's the smart thing to do, here's the emotional thing to do. And there's some
How do we get you as
diagram.
close as possible to the smart thing, but make sure that you can live with it, that you can sleep at night?
Yeah, because it doesn't make any financial sense to spend 10 million right up front to create an annuity that generates 500K a year. Like that, there's so many other ways to go do that. But from a standpoint of creating space, and even if I'm giving up some of that stuff, I don't care. I want the space. I want the space.
Well, if
to
you're
make
older,
better
the
choices.
numbers are different, right? I mean,
yeah, for sure. And I'm mid 40s. Yeah.
Yeah, I did a calculation for a client of mine who's probably 65 years old and his spouse is 57 recently. And for them to do something like this, it was about 6.5%. So a very different payout rate because they are older. And so I think some of this is just, looking at things in terms of, okay, what do I want guaranteed? What is if you've inherited money or if you've won the lottery, what worst case scenario am I okay with? And then plan for that. Guarantee that is your worst case scenario. That's essentially what you're talking about. The reason that you would take that money and stick it into an annuity, even with the payout rate. I mean, first of all, it's better than 3%, which we talk about all the time, that 3 to 4% range. So you're already doing better than the safe withdrawal rate that's kind of industry accepted. And so that it's not a bad decision by any stretch of the imagination to guarantee income for 2 lifetimes. I mean, great. So what you're really saying with that, though, is I want to preserve upside and I have all this other capital that I can do that with, but I want to lock in my worst case scenario so that no matter what happens, I know this is the worst it will ever get.
Right.
And to me, that's brilliant, because once you've locked that in and you've said, like, I've protected my downside, I'm going to be okay forever. The world is your oyster. So I mean, whether I would make that choice or I would make a different one doesn't actually matter. I think what you've done, right, or what you're saying you would do, you haven't actually done it.
Yeah.
But what you're saying
clear,
you would do actually makes a lot of sense.
Won.
Yeah. Right. And a lot of our clients do this in retirement anyways, right? They say my minimum acceptable lifestyle is X. Let's guarantee it forever. And then all my other assets, let's try and grow them still so that we can increase lifestyle over time. And I think, I mean, what you're saying is very consistent with what we actually recommend to our clients. And so I'm going to tell them, I love that personally. What you would actually do matches what we actually tell people to do. Right. I mean, it's beautiful.
Yeah, but I like that yin and yang of it. Okay, I've got my worst case scenario today, and then I've also taken care of all the people that I care about in future generations, and I've gotten those 1-2 things done. The first 2 things that are probably the most important, and then that third is let's go explore. Right? It is that core and explore at a pure level of core and explore. If I've done the thing today, I've taken care of tomorrow, and now what can I go do? What can I go dream? What can I go build? And not from a hedonism standpoint, not if I just want, the one who has the most Aston Martins wins. That's not what I'm talking about. It is who has generated more wealth and served more people and done more things. And at the end of it, and it was funny last night, I was thinking through this, and then we need to go, is I wouldn't quit the job. And it was sort of an interesting component in my brain. It was like, no, I would do it differently. For sure. There would be a whole lot more staff, but I would do the job differently. I will never touch another piece of paper again as long as I live. That will be my motto, right?
No paperwork.
No paperwork ever. But I would still keep doing it. And so it was a nice sort of reminder. It was like, okay, well, if this really showed up, would I give everyone the finger and I'm out, or would I actually keep showing up for work? And it was sort of a nice reminder. It was like, oh, no, I really like what I do. It's just, I would do it differently.
Yeah. Well, I think you and I are the same that way. We'd show up in a really good mood, though.
Yeah.
Show up tomorrow and you'd be like, why are you so happy? I'd be like, what are you talking about?
I'm fine. We have this problem. No, we don't. We'll fix it. Well, it'll be fine.
Everything is fixable. Yeah. No, I definitely think you're right. I mean, I've said that for a long time, that if I won the lottery, I would keep doing exactly what I'm doing, because I think for me, I'm very motivated by impact, and I know what my skills are. I know what my strengths are. I know what my weaknesses are. And given my particular skill set, I think this is probably one of the most impactful things I could do over my lifetime. So I think the only thing that would really change is how quickly I scale what we're doing. For sure. Right? I think I would just do it on a much larger playing field, because the resources would be different to grow it quickly. But you know, it's interesting, because when you said something earlier about Gay Hendricks, he wrote The Big Leap, and you were talking about self-imposed limits. It's funny, because even just having this conversation, I'm like, ooh, I can already do all those things, right? I can already scale things that way. And then it triggers well, why am I not doing it that way now? And so I'm going to get off of this podcast and go sit down and reevaluate our strategic plan for next year.
So I'll see you guys in 2 weeks when we come out of that. So
there you go. Right. Well, hopefully you've got some nuggets out of this. I mean, everything from delaying gratification just a little bit to make sure you're making prudent and sound decisions, and then collecting the team around you and really being deliberate about interviewing and making sure you've gotten the right people. And I think then making sure that you're connecting what you're doing to what actually drives a sense of purpose and fulfillment are probably the most important things to do if you come into sudden wealth of any kind, whether it's the lottery or whether it's an inheritance. And if there's anything that Eric or I can do to help you make decisions in a situation like that, we are always happy to be a sounding board for you. All you have to do is shoot us a DM or email us. And then if you go to the Benchmark Income website, benchmarkincome.com, you can fill out a form if you have questions, and that will come into us, and we are happy to respond. So if you're looking for me, you can find me anywhere you use social media at The Wealth Woman. Eric, where can I find you?
And you can find me at Economics with Eric anywhere you use social media. Thank you guys. Have a great one.
We'll see you next time.